Alright, everyone, welcome back to Crypto Brain, and today we're going to break down Toshi in full depth, not just from a surface level, but from a complete behavioral and smart money perspective. Because what you're seeing right now is not just a simple move, it's a developing story. And if you understand this properly, you'll realize why most traders get trapped while a few stay ahead. So let's begin right from the Toshi website, because this is where the entire perception starts building now. As you land here, the first thing you notice is the clean layout, the controlled branding, and the structured presentation. And this is not random, this is intentional. Because in crypto markets, narrative always builds before price, and strong presentation creates subconscious trust in the mind of viewer, making the project feel more credible and more established. However, this is where a professional mindset differs from our tail mindset, because instead of getting influenced by appearance, we simply acknowledge it and then move forward to validate it through price action, because at the end of the day, the chart always tells the truth. So we transition towards the chart. Now this is where the real analysis begins, and if you carefully observe the initial phase of Toshi price action, you'll notice that price attempts to build a base with buyers stepping around support levels, and this is the point where early confidence starts forming, because reactions from support of 10 signal demand. But here's where most people make a mistake. They assume that every bounce leads to continuation, whereas in reality, the strength of a move is determined by its follow-through. And as you watch close, you'll realize that although price does bounce, the continuation lacks aggression, the moves are slower, the candles are less decisive, and there is visible hesitation, which is your first early warning that demand exists, but it is not strong enough to take control of the market. Now, as price progresses further, this behavior becomes even more clear, because instead of forming clean higher highs and higher lows, the structure begins to weaken. And this is a critical shift, because in a strong bullish trend, price moves with confidence, creating consistent struct. Whereas here we start to see failure near resistance zones and weaker pushes, which indicates that sellers are slowly stepping in and absorbing the buying pressure. And this is exactly where the market begins transitioning from strength into uncertainty, and then potentially into weakness. Now focus very carefully on this next phase, because this is where the most important structural event takes place. The market attempts to hold a level but fails to create a higher low, and instead breaks structure, forming a lower low. And this single move changes the narrative, because once a structure breaks, the probability of continuation decreases, and the probability of either consolidation or downside increases. And this is where most retail traders get trapped, because they continue to buy expecting the previous trend to resume, while the market has already started shifting direction. And this is exactly why understanding structure is so important. Now at this stage we use the next layer of confirmation, which is the coin glass on chain, because price actional one gives us behavior, but liquidity data are. And as you analyze the coin glass data, you can clearly see liquidity clusters forming in specific zones, where large amounts of positions are stacked. And this is crucial because markets are designed to move towards liquidity, not away from it, which means these zones act like magnets for price. And this tells us that the movement we're seeing is not random but engineered, where the market is likely to sweep liquidity on both sides before committing to a clear direction. And this is what separates smart money from retail, because smart money understand that liquidity needs to be taken before aerial move happens. Now, combining this with the current structure, we can build a much clearer scenario. If price continues to show weakness and respects resistance, then there is a high probability that the market will move towards lower liquidity zones to take out those positions. However, if price manages to claim key resistance levels with strong momentum and build back higher lows, then the narrative can shift back towards strength. But until the confirmation appears, the market remains in a vulnerable state, and this is where patience becomes your biggest advantage, because instead of reacting emotionally, you wait for the market to reveal its intention. Now, as we move back towards the website for the final phase, this is not just a simpler revisit, this is a psychological close, because at this point you have seen both sides, you have seen the strong presentation of the project, and you have also analyzed the underlying price behavior, and now the final judgment is formed. And the conclusion here is very clear. The project may look strong from a branding and positioning perspective, Active, but the chart is currently showing signs of hesitation and structural weakness, which means the move is not fully confirmed yet, and further development is required before any strong directional bias can be established. And this is exactly why the correct approach here is discipline, because in trading it's not about being early, it's about being right. And that only happens when confirmation aligns with structure and liquidity behavior. And if you can understand this level of analysis, then you're already operating ahead of the majority of traders. Or are still reacting based on motion and surface level signals, and if you want more high-level non-noise analysis, like this where we focus purely on real market behavior, smart money concepts and high probability setups, then make sure you subscribe to Crypto Brain, because here we don't chase hype, we build understanding, and that is what creates consistency. And I'll see you in the next breakdown.